when a patient approaches your hospital with an insurance card which is not covered for cashless at your hospital, what this particular company, which ABC Limited will do, is that this company will foot this bill of the patient on the behalf of the patient. So the hospital, that is you, will get the payment outrightly. However, what this company does is, this company extends a medical loan to this patient. So these companies are not insurance companies, they are not TPS, they are purely non-banking finance companies. It's a sort of NBFC model where these companies extend a short-term credit to the patient. But the documentation required will be much more than a standard insurance case. The reason being that if this company has to extend the short-term credit, this company requires its documentation. So what are these additional documents that the company will ask for? The company will ask for the CIBIL score, PAN card, cancel check. So basically how it works is, the patient doesn't pay the money upfront, and this company in the back end will process the case for reimbursement. And when this money is credited into the patient's account, this particular company will collect this money from the patient's account directly. Now, these companies over a period of time has gathered the expertise to know that how much of a treatment cost will be covered under insurance and how much will not, according to sublimits and terms and conditions. So what this company has got a good understanding of, that out of the total bill, how much will be the insurance approval, how much will be the insurance payout at the end of the day. And they are able to predict with a fair amount of accuracy that how much will be the patient's out-of-pocket expense. So in total, what these kind of companies provide a benefit of to the hospital is that the risk of non-payment and insurance rejection is taken up by this company instead of the hospital directly. So that gives the hospital a good amount of liquidity and a good amount of cash flow. Whereas this credit period is managed by this company, any payment default is managed by this company, any risk of insurance rejection is also taken up by this company. Now, as I have previously told, that there is no free lunches in this world. There will be some amount of catch somewhere. So let's see what is this catch. So when your insurance, the entire hospital treatment bill is 1 lakh rupees, this company doesn't pay you 1 lakh rupees. The processing charges and the interest for the short-term loan is borne by the hospital. So because it is borne by the hospital, the patient ends up getting a credit only for the amount that is specified, and the charges and the interest is payable from the hospital. So this charges and interest will come to roughly around 10 to 15% depending on which kind of company it is, and accordingly this is processed. Now, a lot of people ask me whether this kind of a process is legally allowed or not. See, it's if you look at it, these companies are working under the ambit of an NBFC. So it's something like buying an iPhone from an electronic chain store and using a Bajaj Finserv EMI card. Where the Bajaj Finserv EMI card, what they do is they extend the credit line to the customer, and the interest and the processing fee is absorbed by the vendor. So here the hospital being the vendor is absorbing this interest and processing fees, and we are letting the patient have a complete payout at the end of the day. So here what happens is, the patient doesn't pay from his pocket, and when the reimbursement is processed, the payment is collected by the company. Now, few concerns here is that, what if when the reimbursement amount comes to the account of the patient and the patient suddenly refuses to pay it, or just takes the money and puts it somewhere else? So that's a loss. Yes, I understand. Those are the kind of incidents that do happen, and these companies absorb the risk of that. So the hospital doesn't have to bother about those risks. So this is this legally is acceptable. Insurance companies and TPS, whatever they say, this is a system which, as far as today, there is no clear ruling against it. So it's a perfectly usable system. I've gone through a lot of such companies, and there are many who are functioning well. There are venture capitalist funded companies doing this, there are individual companies doing this, there are people who are bootstrapped into this kind of a system. So there are a lot of firms who are undertaking this process. And in terms of ophthalmology, see, I am an ophthalmologist, so I'll speak more of ophthalmology. So in terms of ophthalmology, these companies work very well. The reason being that we have a very predictable kind of expenses, because most of our surgeries being of the same kind. As far as the current scenario goes, there is nothing wrong in employing the service of this companies, because there is nothing illegal, outright illegal about it. It is basically a small finance scheme for the patient, but the only condition being that patient should be aware of how the system is working. You cannot, hide the system and tell them and claim something else. So with this, I conclude this video. Kindly, more videos are available on practice management in this channel, and see you soon later. Thank you.